The unemployment rate is much lower than anticipated, which is not what the Bank of England was expecting to see. It's not what economists were expecting to see. We had expected that we'd get a tick up in that unemployment rate from 4.4 to 4.5. It's not. It's down to 4.2. I will point out that in this, we do this every month, and this set of data, there's all kinds of dynamics going on here, including changes to the number of people employed and payrolled, and sometimes the signals can seem a little conflicting, but it does seem to be that the market is moving on. The market, the labour market, looking tighter than anticipated. How much has it fundamentally changed since we got since the pandemic? That's certainly a matter in focus.
And we talked about the market reaction as well off the back of it, just as soon as we get that out. 127 handle on cable, which we've gotten into. It's now bordering 128. So we'll see how that shakes out, whether that's just the knee-jerk reaction or whether we see more.
But here's the interesting thing. You think about where we are in terms of pricing. Are we over our skis in terms of the pricing around the Fed? Are we over our skis in terms of pricing around the ECB? The market is pricing in really big rate cuts coming through from both of those two central banks. The Bank of England looks more normal, and this is only going to further exacerbate the idea that the Bank of England maybe goes once more this year, twice at a push. Other central banks are being priced much more.
It seems, our team pointing out light liquidity very early, a lot of people away, as we know, but there doesn't seem to have been a big shift in BOE expectations at this very early hour, but there's still time, and we have a lot more data to come this week. We get inflation tomorrow, and then we get GDP the day after. So there'll be a lot more in the mix when it comes to the UK.